Good morning, traders, and happy Friday. Today is August 23rd, 2024, and we are keeping the news for the dollar index held above 101 during the Thursday trading, breaking a four-day losing streak. This came as the market awaited Federal Reserve Chairman Jerome Powell's upcoming speech and the reaction to the unemployment data and the S&P PMI data. A slight rise in the U.S. Treasury yields helped to support the U.S. dollar, though the expectations from a dollarish Federal Reserve made further gains challenging. The July Federal Open Market Committee minutes revealed that the most participants were open to the rate cuts for September, adding the pressure to the dollar. Technically, the outlook for the US dollar remains bearish. The index recently broke below the key levels, hitting a low of 100.9, signaling strong downward momentum. Indicators like the RSI and MACD also confirmed the bearish trend. The key support levels are at 100.9 and 100.61, while the resistance lies at 101.87 and 102. Next, with the WTI crude oil, the prices hovered around $74 after the news that the Saudi Arabia oil exports hit a three-year low in June, with the sales of $17.7 billion. This decline led to a postponement of several Saudi projects, sparkling speculation that the OPEC might work to boost their prices in their September meeting. The market anticipation of a potential Federal Reserve rate cut in September could also limit the downside for the WTI price. The WTI prices have dropped more than 5% of $77.2 to a low of $72.77 this week, driven by concerns over the Chinese demand and the ongoing ceasefire talks in the Middle East. Typically, the 14-day RSI continued pressure, and the MACD also suggests a downward adjustment. The key support levels are at 72.62 and 21.7, while the resistance levels to watch are 74.62 and 75.5. And for the gold, continued to yield its correction, trading below $2,500, as the 10-year U.S. Treasury yield held steady after the release of the August PMI data, keeping the gold prices low. Earlier in the evening session, the gold remained above the 2,500 mark, close to the all-time high reached earlier in the week. The minutes from the July Fed meeting indicated that some officials favored immediate rate cuts, reinforcing expectations that the Fed may start easing in September, which boosted the gold price earlier in this week. However, if the U.S. labor market opens, does not support a significant rate cuts, investors will look for clearer signs, making Fed Chairman Jerome Powell's upcoming speech at the Jackson Hole crucial for gold direction. Technically, gold has been in a range-bound consolidation, viewed as a bullish setup for a potential move higher. The daily chart indicators are still in a positive zone, suggesting that the gold could test its recent all-time highs at 2,531 to 2,532. If the buying continues, prices could rise further to the 2,548.9 level. On the downside, any significant drop in the gold prices might attract buyers around the 2,500 mark, with support at 2,485.7 and 2,468.8, potentially pushing prices to the 2,555 to 2,453 range. Lastly, the US dollar rebounded, pushes the AUD USD down to a three-day low near 0.67 on Thursday, after reaching a 5-week high on Wednesday at 0.676. The pair recent rise above the 200-day moving average at 0.665 supports a bullish outlook and short-term upward momentum. Despite some fluctuations in commodity prices, the weaker US dollar and recovering risk assets have driven the USD AUD rally. The RBA also decision to keep the rate steady at $4.35% has also supported the Australian dollar. Governor Bullock maintaining hawkish stance on inflation. Typically, the 14-day RSI has risen to around 60, support continued bullish momentum. If the AUD USD moves higher, it could target Wednesday high of 0.6761. and the July high of 0.6798, a potentially test to 0.6084 level, the highest price this year. On the downside, the key support lies at 50-day moving average of 0.6645, followed by the 200-day moving average at 0.6605. And that is all for today's daily analysis. Thank you for watching, and don't forget to like, comment, subscribe.